In today's video, we're going to look at my idea of liquidity and how the markets move, why the markets move, and how this can help you in your trading. And if you think that's interesting, I definitely think you should smash the subscribe and the like button, because it's going to be a sick video. I'm going to make it nice and short, easy for you guys to understand and comprehend, not a 40-minute video. And yeah, be tuned for the next video where we will look at price action as well and how this doesn't contradict with smart money trading. So let's get into liquidity. So I'm a big believer in, if you can be consistent, secure a certain amount per day and just be consistent, that's the best way to trade. But in developing your best trading style, the biggest gains can be truly said be made by learning institutional methods. You have seen amazing type of trading and amazing gains are made possible with institutional trading, and that all comes from learning about liquidity and how institutions trade. So with that being said, I do go over simple price action strategies which are proved to be consistent, but if you do actually learn about the institutional methods, they are proved to you that they are very, very, very beneficial. So let's get into liquidity. What is liquidity? Well, liquidity is basically orders, and wherever there's a stop loss is where there are orders, right? Because that's how us retail traders trade. The institutions don't trade like us retail traders. They have a different trading method, and their trading method is that if they were to trade like us, then they would move the market too much. So how they have to trade is they have to go and use your stop losses as liquidity to fill their orders to move the price in a direction. So if you imagine this chart right in front of you, there's stop losses below this low, below this low, below this low, all over this chart. Especially look at these highs here, there will be a lot of stop losses. So to give you an example of how they would utilize this is very simple. Well, look at this. Imagine as an institution. So there's a lot of retail traders here taking this trade here, that price every time reached this resistance, price went down, price went down. So obviously there is some sort of resistance at this area, but there's a lot of liquidity. And now that the market makers are said, all right, we want to push the price down, they have to go and eat up this liquidity to fill their orders. So what do they go and do? Well, you can go see that after filling these, they come up here, they eat these orders, they cut all the stop losses out, they fill their sell orders because they've taken your stop losses and now converted them to sell orders and moved the price down. And you can even see there's an order block here. Be sure to stay in this video because we're going to talk about how they utilize this order block as well to continue the price down. And that's one example. Another example, imagine if you were a retail trader and you were saying, look at this trend line, what a beautiful trend line. And we'll look at how, liquidity doesn't even have to happen, where institutions move liquidity, and how they use liquidity can even happen on the 1 minute time frame. And your trades don't have to be very, very long trades, but if you want to be entering on the lower time frames and not waiting 1 hour for a confirmation, then you have to understand that most likely you'll be stopped if you don't understand about liquidity. So look at this trend line. As a retail trader, you're not going to see this trend line like this. People will say, you'll see all of these gurus telling you that you can buy this trend line and the price will go up, but that's not true, because as a retail trader you'll only see the trend line. Let's just quickly replay this. When will you see this trend line? You see, if you look at this now, this looks like just a consolidation, right? You won't see the trend line till probably the third test. And what happens on the third test? Well, you see it comes down, it makes the third test, and now you're saying, all right, the next time it comes down, I'll take a buy. But what happens when it comes down? Well, that doesn't count as a test, so you wait for it, and now you take the buy. But what will end up happening to you? Well, first of all, they've captured some sellers' liquidity here, because you can see that the sellers, they would have taken this breakout trade with this wick here saying that the price is going to go down. So they filled the institution's orders for the price to continue up, because the institutions, they can't buy like this. The reason why markets retrace like this is that institutions are accumulating their orders before they offload their orders. And you'll normally see accumulation, and then you'll see the markets range, and then they offload their orders before continuing in a different direction, right? So the thing is that they are accumulating at these lows here, but so that they can get a cheaper price before moving the price higher and higher, and they offload the orders they would have bought here. They start to offload it here to bring it back down to fill more orders. Now, if you think about here, people would have traded this breakout, and then they would have moved the price back up, stop hunting them. And the people who would have traded this trend line with the idea that price will keep continuing going up, what happens in the future will all of the orders, all of the stop losses sitting at these lows here will eventually get eaten up. And you can see that this is how liquidity, boom, you see, look at all of these stop losses are now getting eaten up, and the liquidity is getting eaten. And now you can see after they've eaten this liquidity, they accumulate orders, and before they will probably move the price in a new direction. You can see now they accumulate orders, move it back down. So this is how a bit of institutions work, and let's go into some more concepts. So now, guys, I'm going to talk a bit about order blocks. Before I want to talk about that, I want you guys to understand that basically what liquidity is we're finding how the market will move and where will the market move. I've explained briefly, liquidity sits where there are a lot of equal tops, and you can basically figure out where, the market will move if you know this liquidity. And the thing is that it's easy. Anyone can, figure out which way a market's going to do eventually. But the problem is getting those entries and getting the entries where you don't get stopped out, where the market continues in the direction you intended. So, for every buy, there's a sell, and for every sell, there's a buy. And you guys have to keep that in mind and understand that this is why we use these techniques, because, that's how we can get those optimal entry on the lower time frame. So let's look at order blocks. We'll take this one as an example, not the best example, but what is an order block? Well, an order block is basically, it has a lot of names. It's very complicated. You could make a whole video about order blocks, but I want to make it nice and simple. An order block is when you have a move, and it's the area before an explosive move. On an uptrend, it would look like that, and this is your order block here. And it's the area that's not retested. It's just an explosive move from a certain area. It could be called a banker's candle, whatever. It has a lot of names. And let's delete all of this. And let's look at this example, and let's rewind it to this point here, right? So let's just take this example here. So we had this candle come here, and we could have seen, like, on the lower time frames, this will be a more clear order block. Actually, we're going to look at an example that a trade that has been taking place today. We're going to look at that trade, and you can actually see a very clear example of the order block on the lower time frames and how to enter that trade. So definitely stick around to then, or if you're just interested in that, press the the timestamps I put. So you can see here we had this sharp move here. So what happens is that now, when an order block happens, is normally when the market makers want to change the direction of the market. So this is not the best example. Normally you should break the low, but I just want to make this video nice and short and give you an example. But you can see that this is an untested zone up here. So what the market has done is they've taken all of the liquidity out. Remember, we were talking about all of those highs. Well, now all of those highs have been eaten. To do that, they've had to put in, let's say, 10 million. So let's say here, to eat all of these highs and to make this move, they have, let's say that they have opened short orders here. They have 50 million short orders here, all right? At this level is where their short orders are. And now they've had to open long orders to go and eat all of this liquidity. So they've had to go and put $10 million dollars worth of long orders, right? So they've had to put 10 million to come up here, eat all of this liquidity, fake people out, grab liquidity, and move the price in the desired direction. But now what's ended up happening is that now they're in drawdown, right? They're in loss because the price has moved down and they've opened long orders. So what they do is they bring the price back up to the area where they opened those long orders so they can offload them and continue the price in the correct direction. So if you look here, it comes back up to the area where they would have open their long orders to eat all of these stop losses here and manipulate, accumulate orders, accumulate liquidity. When you see accumulation like this with all of these wicks on lower time frame, this is manipulation. This looks like this, eat this low, eat that low, come like this, eat these lows, and these are all taking liquidity from here and to accumulate orders to move in the correct direction, and they're accumulating their 50 million sell orders. So now what happened was they brought the price up. Now they close out that $10 million long position they had to be able to manipulate to create the liquidity for the shorts, and now they continue the price in the desired direction. And if you look, you can see that what happens, boom, we continue the downtrend into the desired direction. And let's go look at a trade today and wrap this video up. I think we've done great time so far, and let's go look at that trade. So guys, to wrap this video up, we're going to look at how you can imply this in your trading and how it works to get to optimal entries. We can see that euro dollar has been in a very sharp downtrend. Why? Because it's come to mitigate this order block well from here. You see this order block, it's come to retest that. Now, while testing that order block, we had a huge bullish sentiment here. And you could have got into a long, but we didn't have an opportunity to get long here. I did not find, personally, you guys might have, but I haven't found an opportunity to get long here. Now, what I did notice is on the way down, we have created a lot of liquidity areas. You can see here, double top here, a lot of sell orders sitting here, a lot of sell orders sitting all here. So eventually I knew that these points were going to go and get attacked. But what happened here is that the double top here ended up getting attacked, but we didn't close above, so it's not technically breaking structure in terms of higher time frames. We're still on a downtrend. And what happened is I came into the session trading this for London, and I saw that these tops have been eaten. The stop hunts have been people had liquidity has been taken for price to continue down. But I see here that we left an order block after the sharp move, so I know that the institutions will want to go and fill their orders and also create more liquidity in the market. So you can see here that after coming back down here, what did we test? Well, we've been in an uptrend from this ever position, so we came and we tapped this order block down here, tricking people that this is just a retracement, and now we're continuing back. So now there are all long orders here, right? A lot of people have gone long because why? The trend was going up, and now we have a retracement, but they don't understand this is a liquidity grab. We have a retracement, and now we're making lower highs. I'm taking buys of this to continue the trend up, and then they get something really, really, really special, is they get